Hi you guys, welcome back. It's Alexis. Today's video we're going to be talking about how to be good with money, about how to become financially successful. So when a lot of people think about the term how to be good with money, they're thinking like, what are ways that they can improve the process of how to manage their money? So it's basically money management 101, which is very important when you have yourself or you have a family. You need to think about ways and how you're really managing your money and how you're going to be successful by doing that. Tip number one is to set a goal. So for some people, as far as managing their money, they usually would like to set goals for maybe 6 months. Some people also like to set goals for maybe a whole year. It just depends on which one you're able to kind of stick with. So by setting a goal, you'll set either a short-term goal that you want to achieve with your money, or a long-term goal that you want to achieve with your money. Maybe one of your goals is like you want to be able to have extra amount of cash to go on a nice luxury vacation at the end of the year. That's one of your goals. Or maybe one of your other goals might be you want to double up on your savings account and then more into, your retirement account. So that's another goal. So whatever your goals are, you have to write those down and set them out realistically and be realistic with your goals. If you know you cannot or will not stick with the goal for more than a month, then I would say set out monthly goals to take it slow. And that looks different for everyone. Because for me, I could set a long-term goal for a whole year, but sometimes I might come back to my goal and retweak things that I might want to do, say in that month say in January of 2022, I want to set this goal. Or maybe February of 2022, I want to set this goal. So you just set your goals out, whether they're short term or long term. You want to set goals that you will be able to meet. Tip number 2 is going to be set and create a budget. Now, my spouse will tell you, I am the queen of budgeting. I literally have a budget for everything. Let him tell it. So you want to set a budget. With creating or setting a budget, what I would tell some people is to go through the amount that you're getting paid every 2 weeks or every week, however you're getting paid from your job. See how much it is that you have totaling at the top, and then see how much it is that you're least likely to bring in basis. So depending on how much it is that you're able to bring in on a monthly basis, you want to create your budget around that. If you're living in an apartment, you want to have your budget for your rent. So you also want to have your budget for your food and groceries. You also want to have budget for transportation if you have to pay a car note, or maybe you just have to pay your car insurance because your car is already paid off. Then you also want to budget in gas, you want to budget in lights, you want to budget in homeowners insurance. So set your monthly budget to what is going to be feasible for you financially. Now, another easy way to do budgeting and how to keep track of your expenses, what I like to do also is do cash folders. So you know how Wells Fargo gives you the cash folder? So it's the little envelope. You can get as many of those as you want and you don't have to pay for them. Keyword of advice. You can take many of those, maybe label one rent or mortgage, label the other one food, groceries, label the other folder vacation. So set those amounts and have those amounts set. And then whatever you're using that month, whatever you still have left over in the envelopes, then that is where you have the extra money for the month that you have not used. And then you can like put that money to the side in your savings account. That's another good way to budget. Now, tip number 3 is going to be create your emergency fund. It is very, very, come closer, very, very important that you create an emergency fund. By creating an emergency fund, I would recommend anybody have about maybe $1,000 to $2,000 in their emergency fund in cash, because life happens to us all. We all have unexpected expenses that may come up, like maybe your car breaks down and you need to get the engine fixed. Maybe you receive unexpected medical bill or something like that comes in. So you want to have that cash on hand. I would tell anybody to at least keep $1,000 to $2,000 worth of emergency fund cash in your account. So another thing would be with the emergency fund cash, this is not going to be cash that you're putting into your investment accounts or anything like that. This is pure cash that you're going to keep on hand with you in case something happens. Number 4 is to pay off your debt. With paying off your debt, you want to pay off things like student loans, car loans, maybe credit card debt. With credit card debt, just a little FYI, that might be the one you want to pay down first, because the interest rate on there is so crazy depending on what credit card you have with whichever bank. Like for instance, for me, I have a credit card with Wells Fargo. You know how much that APR is on that credit card? That APR is literally 25% interest on that one credit card from Wells Fargo. And I've had that card for like 11 years. So you could just imagine if I was late on a payment, man, it would be a wrap. I advise people, if you have credit cards, do not close them out. You want to pay them down with the interest rate that you owe on the credit card. And if you have the money to pay off the credit card, I would recommend to people, do not even use the card. I would recommend that you use solely cash to pay for things instead of using the credit card. So one, you never want to close out the credit card. You always want to pay down the highest percentage of interest debt that you have. So say if it's medical bills, the percentages racking up on the medical bills, then you would want to pay that down first. But if it's, on the other hand, the credit card, then you want to pay that down first. If you have the debt, you want to make sure that you're paying the debt off and paying it down. And I would tell anybody, do not put yourself in a hole, or do not try to skip out on your necessary things like rent, paying your rent or your mortgage or something like that, just to pay off a debt. You need to pay your necessary need items with your amount of money and pay the debt off as you go. And then another FYI tip, once you pay the debt off, your credit score, it goes up. So that's the extra plus. I mean, no one really likes to pay debt off, but the score will go up. Good little plus. Tip number 5 is to save for retirement. You want to start saving for your retirement, whether you have a 401k with your job, or maybe you just have a traditional IRA or a Roth IRA. you want to start contributing money into those accounts. For some people, if you say you want to go and open a traditional IRA or a Roth IRA, you can open them at different investment companies. Fidelity, which I recommend, is very good, and the fees are no fees. Vanguard is also a great place to open an investment account. Those two I would recommend to anyone if you're looking to open additional accounts, whether it's a IRA or if it's a brokerage account. Then as far as when you're trying to just regularly save money, make sure that you stick to the budget that you created for yourself. You do not want to deviate from the budget, or if you have to rebudget, then rebudget, because sometimes it happens to us all. Don't feel bad about it. Then number 6 is you want to start invest. So a lot of people think that you have to have all of this money to start investing. Back in the day, investing was for the elite, really. But now anybody can invest, and you don't even have to have much, not even like $5,000. You can invest with only $100. Start investing, because you'll be able to have that money make compound interest for you, which means you'll get money on top of money. When it comes to long term, that will be so much compound interest that you will have accumulated. It's gold, literally. Investing, I would recommend that you go to certain places like Fidelity or Vanguard are really good when it comes to opening investment accounts or brokerage accounts. They're really, really good. Then you have tip number 7 is you want to keep a good credit score. If your credit score is not good right now, paying off the debt is going to help boost your credit score. So you don't have to worry about that. So with credit score, you're able to do a lot of things with credit score. And a lot of people think having a good credit score is not necessarily a necessary, but it is. It's really good. Because with credit scores, you're able to leverage, like say you want to open a new line of credit or something, you're able to have more leverage because the credit score is there for you, not just besides having the cash, of course. Then tip number 8 is if you do not have a financial advisor, to seek out getting a financial advisor. Financial advisors are good if you want to go that route, or say if you want to manage your own money, then you can also do that yourself. I do it myself, and it's turned out very successful for me. I mean, either way, it's good. But these are just tips to help you with your money management when it comes to being financially successful. These are tips that I use literally every day for years on end. I have literally used all of these tips, and they have been really successful for me. So I would not tell you guys something that I'm not already doing. And with that being said, I hope that you guys enjoyed this video. If there is other content that you want me to create, please leave a comment below, like this video below, and subscribe to my channel, and I will be coming out with more content like this for you guys. Like this video and subscribe. You guys have a good day. Bye.